Hey, I'm the insurance guy. Let's get it. Insurance. It's a word we hear all the time, but what does it really mean? At its core, insurance is a safety net. It's a way to manage the financial risks of life's unexpected events. Think of it like this. You pay a small, regular amount, called a premium, to an insurance company. In return, they promise to help cover the costs if something bad happens, like a car accident, a house fire, or a medical emergency. It's a system where many people pool their resources to help the few who suffer a loss. This concept is called risk transfer. You're transferring the risk of a large, unaffordable loss from yourself to the insurance company. Now you might be thinking, what if I never need it? Isn't it just wasted money? That's a common thought, but it's like asking if a fire extinguisher is a waste of money if your house never catches fire. The value isn't in using it every day. The value is in the peace of mind, knowing it's there if you need it. The premium you pay is the price for that peace of mind. Without insurance, a single unexpected event could wipe out your savings and put you in debt for years. It's a shield against financial disaster. Let's break down some key terms you'll encounter. We already mentioned the premium, which is your regular payment. Then there's the policy. This is the legal contract between you and the insurance company. It details everything: what's covered, what's not, how much you'll pay, and how much the company will pay out. It's crucial to read your policy carefully. The deductible is another important one. This is the amount of money you have to pay out of pocket for a claim before the insurance company starts to pay. For example, if you have a $500 deductible on your car insurance and you have an accident that causes $2,000 in damage, you pay the first $500. There are so many different types of insurance, each designed for a specific risk. Let's talk about some of the most common ones. First up, auto insurance. In most places, it's legally required to drive a car. It covers damages to your vehicle and liability for any injuries or damage you might cause to others in an accident. There are different levels of coverage, from basic liability, which covers the other person, to comprehensive coverage, which can cover things like theft or damage from a storm, and collision coverage, which covers your own car in an accident. Choosing the right auto insurance depends on the value of your car, how much you drive, and your personal financial situation. Next, we have health insurance. This is a huge one. Medical bills can be astronomical, and health insurance is designed to help cover those costs. It can pay for doctor's visits, hospital stays, prescription drugs, and preventive care. In many countries, health insurance is tied to employment, but you can also buy individual plans. Understanding terms like co-pays, which are fixed amounts you pay for a service, and co-insurance, a percentage of the cost you share with the insurer, is key to navigating your health plan effectively. Without it, a sudden illness or injury could become a crippling financial burden. Then there's homeowners or renters insurance. If you own a home, your mortgage lender will almost certainly require you to have homeowners insurance. This protects your biggest asset against damage from things like fire, windstorms, or theft. It also includes liability coverage, so if someone gets injured on your property, you're protected. If you rent, you might think you don't need insurance because the landlord has a policy. But the landlord's policy only covers the building itself, not your personal belongings. Renter's insurance is incredibly affordable and covers your furniture, clothes, electronics, and other possessions if they're stolen or damaged. It's a must-have for anyone who rents. Let's not forget life insurance. This one is a little different. It's not for you, but for the people you leave behind. If you pass away, life insurance provides a tax-free lump sum payment to your beneficiaries, usually your family. This money can help them cover funeral costs, pay off a mortgage, fund a child's education, or simply replace your lost income so they can maintain their standard of living. There are two main types: term life insurance, which covers you for a specific period, say 20 or 30 years, and is generally more affordable. Then there's whole life insurance, which covers you for your entire life and builds up a cash value over time. Choosing between them depends on your long-term financial goals and your family's needs. Disability insurance is another critical, yet often overlooked type. What would happen if you became sick or injured and couldn't work for an extended period? How would you pay your bills? Disability insurance is designed to replace a portion of your income in that exact scenario. It acts as a paycheck protector. There's short-term disability, which might cover you for a few months, and long-term disability, which can provide income for many years, sometimes until retirement. Your ability to earn an income is your most valuable asset, and disability insurance is the way you protect it. So how do you actually get insurance? The process usually starts with getting a quote. You provide some personal information to an insurance company or an agent, and they calculate your premium based on your risk profile. For auto insurance, they'll look at your age, driving record, and the type of car you have. For life insurance, they'll consider your age, health, and lifestyle. It is always a good idea to shop around and get quotes from multiple companies to find the best rate and coverage for your needs. You can work directly with a company, known as a captive agent, or with an independent agent or broker who represents multiple companies and can help you compare options. Once you've chosen a policy, you'll go through the underwriting process. This is when the insurance company officially evaluates your application and assesses the risk of insuring you. They might review your medical records for a life or health insurance application or check your driving history for auto insurance. Once approved, your policy becomes active as soon as you make your first premium payment. But what happens when you actually need to use your insurance? That's when you file a claim. A claim is a formal request to the insurance company for payment based on the terms of your policy. For example, after a car accident, you would contact your insurer, provide details of the incident, and submit any required documentation, like a police report or photos of the damage. An adjuster from the insurance company will then investigate the claim to determine if it's covered by your policy and how much they will pay out. It's important to file claims promptly and provide as much accurate information as possible to ensure a smooth process. Understanding insurance isn't just about protecting your stuff. It's a fundamental part of a sound financial plan. It's about creating security for yourself and your loved ones. By taking the time to understand the basics, you can make informed decisions that protect your financial well-being from life's inevitable uncertainties. It's about being prepared, not paranoid. It's about knowing that if the worst happens, you have a plan in place. It's about buying peace of mind, one premium at a time. It's a tool that empowers you to take calculated risks and live your life more fully, knowing you have a safety net ready to catch you.